Hello, Guido here from blockbuilders.net, and today I want to show you how Bybit works. Bybit is one of the largest cryptocurrency exchanges in the world, and it's really popular for people who want to trade derivatives or future contracts. And I will show you today how everything works. If you don't have a Bybit account yet, I put a link down in the description that you can use to sign up. And there are always special promotions when you use that link, so feel free to use that. Once you have an account, you can, or you actually need to verify your identity in order to trade on the exchange. And in order to do that, you just click on your account, and then you go to identity verification, and then you need to verify your identity. And in order to do that, you need to upload an ID card or a passport. And usually it works automatically within a couple of seconds. However, sometimes you need to wait a couple of hours when they have to check manually some things. So once you have that, the next thing to do would be to put some money into your account. And there are basically two ways to do that. You can either put a regular currency, like for example, I'm in Germany, I can put euros into my account, or you can transfer cryptocurrencies to Bybit. And it's fairly straightforward. And if you want to transfer cryptocurrencies to Bybit, you just click on deposit here, and then you select your cryptocurrency. And let's say you want to transfer Ethereum. Then you select the chain. It's usually the Ethereum ERC20 chain, and then you acknowledge that, and then you can basically copy the address, and you can basically send money to that address. And they only need 6 confirmations. That basically means on the Ethereum exchange, there's a new block every 10 to 15 seconds. So it basically only takes like 1 to 2 minutes until you have a full confirmation and you can start trading with your funds on the exchange. And as I said, you can also deposit regular currencies. And in order to do that, you just click there, and then you say, okay, I want to deposit 1,000 euros, for example, or any other currency, depends where you are located. And then you can, so for example, for me, it would be a bank transfer, so SEPA. That's what they call it. And it's only 0.19% fee. And then I can choose that, click continue. It loads. And here you have to make sure that the name from your Bybit account, so let's say it's your name, has to be the same than the name from the bank account where you send the money from. It doesn't work if you send money from your wife's account, for example, to Bybit, and because the two names need to match from the Bybit account and from the bank account that is sending the money to Bybit. And then you need to agree to the terms, and then they will show you in the next step the data where you can send the money to. And that's basically it. And it usually takes like 1 day until you have the money in your account. And then you can basically start trading. And here you have to know that they have several wallets. So there's a funding wallet and a trading wallet. And you can always send money from one wallet to the other wallet. So from funding to trading and so on. And it's free and it's instant, so you don't have to wait until the money arrives. And if you have money in your trading account, that's for trading. So if you're trading, for example, you trade futures with high leverage, then you can only use the money in your trading account and not the one in your funding account. So that's kind of a safety measure here, and a lot of exchanges have that. So that's that. And if you want to trade, it's best to have USDT in your account, so Tether here, USDT, and you can, for example, convert your euros or whatever you have into any other cryptocurrency. So you can basically convert them to USDT. That's for so here you can select, for example, your regular currencies, and then you can select the cryptocurrencies USDT, and you can, of course, switch. And that's basically it. Then you have your euros or whatever currency you have in USDT, and then you can start trading. And there are basically two main types of trading. There's spot trading on the exchange, and there is futures trading, or derivatives, how it's called. And spot trading is fairly straightforward. So you just have USDT, and with that you can buy a cryptocurrency. And once you have that cryptocurrency, it's in your account and you can withdraw it, and it basically belongs to you, and you can't use leverage or anything. And with derivatives, it's different. There you don't trade cryptocurrencies that you can withdraw, but you are trading contracts with leverage, if you like. So let's have a look at spot trading first. And spot trading is basically longer term trading. So if you just want to have a cryptocurrency that you want to have for several years or several months or several weeks, and it's usually best to use spot trading. And here you can select your trading pair, or you can select your trading or your cryptocurrency here that you want to trade. It's usually against USDT, as I said. So you need USDT in your account to buy it. Some cryptocurrencies are traded against Euro, for example, but that's not a lot. But all of them are traded against USDT. And once you have selected your cryptocurrency, let's go with Bitcoin here. Then you have the chart here, one candle here is 1 hour. You can change that to like 4 hours or 1 day and so on. And then there's the order book. In red you have all the sell orders, and in green you have all the buy orders. Here you have the last trades, and here's the interface where you can basically put your order in. Let's start with the buy order, and there and spot. So here you can see we are trading spot. You can basically do a market or a limit order, and the market order is fairly straightforward. You just say, okay, I want to invest half my money or 25% or 7% or whatever you like, and just click buy, and the order will get filled immediately to the best price available. And with the limit order you can say, okay, I want to buy Bitcoin if the price drops to 36,000, for example, or 35,000 or whatever you like, and then I want to invest half my money, and then you just click buy BTC. And here you always have to use a price for one full cryptocurrency. So even if you just want to buy half a Bitcoin or 0.1 Bitcoin, you always have to type in the price for like 1 unit. And as you can see, I have now the spot limit order in the order book, and that would be here at 36,000, and you can see it here, and it basically stays there until the price is reached. And of course you can cancel the order anytime. And the same is true with sell orders. You can do a market order. You can say, okay, I want to sell all my Bitcoin or half of it, or you can say, okay, I want to sell half of it when the price goes up to, let's say, 40,000. And then you can press sell here, and then it goes in the order book, and then it stays here until the price is reached. And of course you can cancel it anytime if you like. So that's basically spot trading, and let's have a look at derivatives or futures. And there are several kinds of futures. As you can see, there are USDT perpetuals, USDC contracts, inverse contracts, inverse futures, and options. And the most popular ones, and the ones we will focus on now, are USDT perpetuals. So you can see here the trading volume for BTC against USDT was 6.5 billion in the last 24 hours. If we compare that to USDC contracts, it was just 24 million. So most people really trade USDT perpetuals. And inverse basically means you can use a cryptocurrency as a collateral. However, let's stick with USDT here at the beginning. And you can select your cryptocurrency here that you want to trade. Let's stick with Bitcoin again. And then the interface basically looks similar. You have the chart here with like 4 hours. You can change that. And the order book with sell orders, here the buy orders, and then the limit and the market orders. However, here you can also select a leverage. So if you want to trade Bitcoin, you can use a leverage of up to 100x. I wouldn't recommend that. 100x basically means if you have 1,000 US dollars in your account, you can open up a position up to 100,000 US dollars. However, if the price runs just 1% against you, you will be liquidated. If you use a leverage of 1 to 10, so 10x, you will get liquidated if the price runs 10% against you. So I would always recommend using a leverage of like 5x or so, or maybe less. So the highest for Bitcoin, you can use maybe 5x for smaller cryptocurrencies that are a bit more volatile. I wouldn't go higher than 3x. And then you can select cross or isolated margin. And I would always go, especially at the beginning, with isolated margin. That basically means you can only use the money that you have in that position. And for cross, it basically takes the money, the whole money in your trading account. So let's say you have, you invest half your money in a position here at 10x leverage. So even if the price drops by 10%, since you still have money in your trading account, it won't liquidate you, because you still have money in your trading account. However, if you have several positions, it gets quite tricky and you really have to know what you are doing. So I would always go with isolated margin. Then you can only use the money that you have in that position. And once you open a position, it can either be market or limit order again. As I said, it basically works the same. And you can say, okay, want to invest half my money if the Bitcoin price goes to, I don't know, 36,000. And then you can buy long here, and then you would have an open order under current orders. And once you're in a position, you can basically see I have a clear position here. You can see the entry price, the market price, the realized P&L and the unrealized P&L. Realized P&L is basically the fee you are paying when you open a position, and the funding. So you can see the current funding rate here. It basically changes, and funding is paid every 8 hours. So only if you are in a position, once this countdown runs to 0, you need to pay funding or you receive funding. So right now, funding is positive. That basically means you are getting money if you are short. If you are long, like me right now, I would pay funding, so 0.01% on my position here. And if I would be short, I would get that money. But right now I'm long here for the sake of the argument to show it to you. And funding is basically there to adjust for the number of long contracts and short contracts. So usually more people are long or more people are short, and to adjust for that you have funding. So right now longs are basically paying shorts. So that's basically it in terms of futures trading. I talked briefly about the fees, and there's a difference. You can see that on CoinMarketCap.com. There's a difference between a maker fee and a taker fee. So you can see Bybit, if you trade derivatives, so futures, has a maker fee of 0.02% and a taker fee of 0.055%. And it's basically similar to their competitors. And maker fee is basically a limit order that doesn't get filled immediately, and the taker fee is a market order that gets filled immediately, because you are taking liquidity away from the exchange, because you are like taking liquidity out of the order book. That's why you are paying a bit higher fee. And if you do spot trading, the fee is 0.1%. So it's also very fair, but a bit higher than futures trading. So that's it in terms of fee. Then we can have a look. They have like a couple of tools here that you can use. You can use copy trading. You can see successful traders here, and you can basically click on them and see how they did. And then you can basically copy them. This one is full. However, once a spot gets available, you can basically copy them, and that basically means their trades will be automatically copied into your account. You just have to select how much money you want to use to copy that trader. And that's it in terms of copy trading. There are other tools where I make separate videos about. That's like trading bots, so you can use a grid bot and a futures grid bot and dollar cost average, and that's basically the bots. And then there's something that they call Bybit Savings. It basically gives you the option to earn interest on your cryptocurrencies. So let's say you have Solana in your account, and you can earn a yearly interest of up to 100%. Just need to select which one you want to do here. And if they say 7 days and tell you it's 100%, that's annual here. So you have to divide the 7 days by 365 days, and then you get the percentage amount that you are actually getting. So you wouldn't get 100% after 7 days. And when it says fixed, it's basically for a fixed period of time, like 30 days, and flexible basically means you can withdraw it anytime you want to. And that's basically the stuff about Bybit. If you have any question about it, please feel free to use the comments down below. If you find that video helpful, please hit the like button and subscribe to my channel. Thanks for watching.